Good morning. Hope everybody's having a good morning. Well, yesterday was, for the most part, another running in place, gapping to the top of the range, and looked like it was going to break out. Didn't happen. Didn't break down. Held there. On the little micro dips, buyers stepped up and held their ground, and we got a green day. So here we are now with a little bit of a gap down. Just looking at where things are coming up here a little bit. We can see on the 5-minute chart of the Qs, 268. What's the low of yesterday? 267.87. So thereabouts, gapping down to the area of yesterday's low in the area. So bottom of the range, move up to the top of the range, gap up. That was Friday's miracle reversal day. That was pretty amazing. Rally after being down as much as it was, but it hit support and buyers stepped up. And on yesterday, a gap up to the top of the range, which historically would have been at least a high probability short setup intraday. Didn't work out that way. I said buyers were so enthusiastic, they even bought the little micro dips and pushed it up, and things just kind of flip-flopped, as you can see, throughout the trading day. So now with this gap down, there's this unfilled gap down below. You would think that is a no-brainer short with a gap down under that bar like that. And so 268-ish, it's coming up above that. So yesterday's low being first resistance, we got a little bit of a void, as you can see in here. And so a reversal could be in the first 5 minutes, could be 10 o'clock. Anyway, there's a void down below here. There's an unfilled gap, and there's really nothing here either. That being said, this market has been showing incredible strength and resilience in the face of everything that we are all aware of. Hope to some point never hear the word coronavirus again in my life. And anyway, so we'll see. Every time it's gotten to the top of the range, and you can see it happen on a gap down and move up, collapsed, gap down, collapse, gap up, sits there like, bring it on. We'll take all you got. And so now the gap down, we'll see how far it goes today, but it's gapping under a base. So there's plenty of supply hanging overhead from yesterday. So as we look at charts, we look at trends, we look at what's to the left, we look at multiple time frames, and we come to a probability of what's going to happen. So the probability with a gap down today is that some kind of a retracement into support, where the expectation is buyers will step up again unless something unusual happens and it just keeps pulling back. Who knows? We'll just have to see. There is the potential for that, since there is a price void underneath. Right? So step by step, we'll see where the other markets are at and see what things look like. I'm looking at the ETFs to start here. And so the S&Ps were able to clear that resistance, but they held up. Same story, just chop sideways all day long. There's this unfilled gap over there to the left. I can scrunch that up a little bit, and you can see the all-time high up there in the unfilled gap. So if she should be able to show some strength, there's the next resistance area. And so resistance, we always look at it as an area, not an exact point. But so that would be the area up there near the old all-time high. All right, so 327.50, yesterday's low, 327.73, gapping down below it. Supposed to go down, right? test some support. So buyers are caught up here. Why the people, traders, institutions would want to buy, NASDAQ up at the all-time high, gapping up from the bottom of the range, rallying from the bottom of the range to the top of the range is beyond me. But hey, can't argue with it. They won yesterday. Narrow range day. They didn't get it very far. And now gapping down below the low. There's a void below. Suggests it should go down. We'll see if it gets down there or whether it holds support and creates. And so, when I say create support, it's a scenario like this, meaning you can see that the move up yesterday, the gap up. So it rallied on Friday, wide range bar into the close. It gaps up and comes in. It's supposed to go down. And I say it's supposed to go down because after doing this for about 30 years and looking at that scenario over all of those years, it's supposed to go down. And it didn't go down. It held the low, and then it pivoted, it created support, and it held that all day long. And so now gapping down below it, resistance up above, call it a little mini Bear Island reversal, gapping down into this area here. Supposed to be bearish, void down below, and we'll see how far it goes. And let's look at the Russell, which is supposed to be bringing up the rear. All right, we've been talking about this for 2 weeks, and it's just been slopping all over the place. It showed some relative strength yesterday, a wider range bar, and here at the top of the range. Question is, can it get through it? What happens today? So we've got this run up, and someone, I think it was Cliff, asked me yesterday in the green room when it was about here, about taking a scalp at long near the end of the day. And I said, well, looks like it could get to 150, and just about looks like it almost tagged it. Just missed it by a few pennies. Anyway, top of the range there. Running from the bottom of the range to the top of the range, they usually run out of gas. It's common sense. No indicators needed, no nothing, just common sense. You started here, you ran all the way up there without any resting, and it needs a little rest. So if today turns out to be another resting day and prices could stay in the top of this range thereabouts, as we look at the halfway mark, that'll be bullish. And look, if this can hold here and take out this high, it should make a run. And, while how significant that is as far as, the big picture, not very, but, over the course of maybe a day or two, that could be a nice significant move. And the pattern at the moment says that's what it should do. You see this consolidation. We've talked about it for a couple of weeks now. The bottoming tail bar, and then yesterday's bar closing strong. And where is this now? It went down to just under 148. 148. Oh, really? Just above below 149. So holding up okay relative to the others. So we'll see how buyers want to step up or not. So there, photo guy, there's IWM asking about that in YouTube. And John, interested in leveraged biotechs, LABU. So this came down and broke these lows here. So it's violated the uptrend. And it got its turnaround after doing that. We'll see what kind of follow through it has here. You can see the depth of the pullback that occurred. You can see the big reversal on the weekly. It's at minor support. I'd be a little careful with this. I'm always careful, but it's violated the trend. So you got resistance pretty close by. So you can't really get too bullish on it. And with this 3-bar reversal, you really can't get too bearish either. All right, futures. Let's look at the transports, and then we'll look at the futures. So transport's held up. Interestingly enough, I guess it was just that kind of a day where initially things got sold because of the gap up and then buyers stepped up again. But, the airlines were, falling from the sky yesterday morning and then had a miracle turnaround. It seems like it's an exaggerated comment, but if you saw as it was, some of them were going down early on, but you could see that, this is the ETF for the airlines, would dip down. It looked like it was going to keep going down and then came back to form another bottoming tail bar there. So keep an eye on those airlines. Curious here. Yeah, got a bottoming tail bar holding the base, so maybe they can hold it together. We shall see. All right. Futures, S&Ps, you get a 24-hour chart, gets maybe a little clearer. Inside bar so far, bottoming tail bars, buyers on the dip, yada, yada. Hit it, resistance there, coming back in. We'll see how far it goes. Uptrend, sideways, up into resistance here. I guess the big question is, can it get up above and make a new all-time high? And at that point, I suspect our market internals will flash a sell signal and we'll see what happens. And Qs just stalled up there at resistance, coming in a little bit. No big deal. We'll see how far it gets. But basically, at the end of the day, what we'll want to see is we'll assess how much sellers could take control or not. And by that, all we need to do is look at this red bar that is red at the moment. Is it red at the end of the day? And if it is, how far can sellers push it into the range of yesterday? So where it is right now would be, sellers, is that the best you could do? On the other hand, if it's closing below the low of that green bar, that's going to be rather bearish, suggesting a move lower. It's really just common sense. When you look at candles in this manner and bar by bar analysis, as we call it, just looking at what is the message of the current candle. Well, and this one here was a bottoming tail. The buyer's on the dip, it should go higher. Green bar, small little wick, open down here, should go higher. Well, it started to. Well, that's today. It started to, and now it's red. We'll see what happens. Dow has been the weaker, and it held its own yesterday. And it's like this morning or overnight, it blipped above the highs and came back in again. So sellers are, I guess, a little nervous here. Still lots of news going on in China, flapping gums, and U.S. doing the same and whatever. Overall, the weekly chart is just, you can see, a lot of running in place. There is your Russell futures, a little double top up there, peekaboo above the high, and come back in here. Gold, we'll get to gold. Let's look at bonds and oil. Interest rates. Well, this is bond prices. Interest rates mean they're going down as bond prices are going up, and you've got a bullish reversal. It hasn't cleared that resistance, but I'm telling you, this is not good. It's not good. We got these, we talked about this yesterday a bit. Short-term interest rates, 3-month came up a little bit here. And so this actually coming up, you can see it's gap up. It is something to take note of because these 3-month start inching higher. And I can't imagine why they would inch significantly higher because the Fed isn't going to raise interest rates. But you've got longer terms, diving down. So at some point, if these continue to go down, this is the 5-year, this is the 10-year. If you see that 5-year give a kiss to the 3-month, you're going to see some nervous institutions, and you'll hear it in the news. They'll start talking about it, and that will create some supply coming in, as it always has historically. All right. Oil down a little bit, slopping around, nothing big there. And gold just holding up there a couple of days. It's a little extended. You would think it'd pull back, but nope. Buyers are willing to take it here, even in the face of the big 2,000 whole number. So, do you think intraday breakout is high odds here in IWM, or wait for the close? I don't know. Sky's 13. See how things shape up intraday. Right now, I would say no, but at 1 o'clock, it could be a screaming yes that it's going to break out. So the picture right now is telling us that there's some selling going on. It's not that extensive, but you should respect it to say, hey, just hit the buy button right at this moment doesn't sound like such a great idea. Silver is hanging up there at the highs, still bullish. Someone asked me about sentiment. Bearish as hell. Extremely bearish sentiment. Breadth is just dead neutral. You've got, everybody knows there's a handful of stocks that are holding this market together. And that's why breadth is down here like this. And if the markets should, push to the upside and the dogs rise up, this will come up into a bearish territory and we'll get a sell signal. And what kind of correction happens from there, we shall see. But we know historically when these two meet up at the top, you're going to get some kind of a correction, just like they did here. And so it came down in a nasty way and then just spent a whole lot of time grinding and still grinding. There you have it. All yours, Dan.
Thanks. Good morning, everyone. All right, all our opens are fine. So I'm just going to go right to gappers and earnings. Well, I'll just mention two of them. Google, we have a call spread and gapping down $3, but on a $1,500 stock, that's not much. Facebook, we put on a call spread yesterday. Codex is the biggest one against us, and we only have a third of a lot left. We have a covered call, so it's totally fine. Just let it play out. That was our home run, last third position. Everything else is fine. Actually getting a gap up in this KKR. So that looks good. All right, gappers here. MNK. Do you remember when we were trading that thing around $50 and $80? It looks like you had some bottom fishers here last week, and now they're getting slammed in the face again. Got no interest in that. Said G had earnings 188. The gap's too big, but if you can get a put spread, it'd be fine. Greg, this might turn out to be a bull sandwich with the gap. Well, that's technically not true. Not true, because it's gapping under the green bar. It's not a bearish engulfing, but it's still the same bearish message. Red bar ignored, followed by a gap under both of these. So that's a call spread candidate. McGraw sent me an email here on keys, unusual option activity. Looks like a no-brainer put spread. It's okay for a breakout, McGraw, if would I take it, but for that information, no. But if you're using that information to make better a bullish pattern, then I'd say fine. That might bring it up to 102, 104. I don't know. ENPH 64. Yeah, gap and resistance. UAVS 314. That could be worth watching. I mean, it's gap and resistance, but the monthly, just me eyeballing this little picture right here, could go to 6. So it's worth putting in a minder. ADT, I don't know what you want me to do with that, Ahmad. That's the one that Google's taking a stake in. Crazy day. It's on a downtrend. It's gapping down. I mean, maybe a short under the pre-market low. But see, you all, when you just give me a symbol, I have no idea what you're asking me. BBAR, $5. The gap's too big. It's gapping over 10%, Tehran. So you just got to put it in a minder and watch it if you have interest. But is it a tier 1 to me? No, not at all. Let me continue. Hey, Ganga. This looks like either a penny stock toy or some bio. It's gapping up. I don't like the way it trades, but it's a bullish gap. Cent. 270. Yeah, that one's worth watching. It's also coming out of a coma. Is that a bio? VRNS, I can't tell what you're gapping. SSNT, big old gap. Look at that, 270 to 11 bucks. I have no interest in watching you. MIME, 4650, no pattern. You're gone. See, folks, I purposely, I actually like deleting symbols because then they're out of my focus. It looks like there's not a lot of volume here, but if this were gapping, if this was gapping to 140, then I'd say it's a gap and crap candidate. It's up, wide range bar, up 8 days, then gapping up 11 bucks. Look at this GIMA I had here in the middle chart from yesterday. Remember I said yesterday I would love for this thing to gap up 5 bucks and then we short a 10-minute low. I mean, it's still in an uptrend, still up, higher highs, higher lows above the 20. But that's the biggest bar, far from the 20. That's definitely on my list when it runs out of jet fuel. Ludwig, IAA, 4420. It's worth a watch, but with the markets weak here today, unless something is genuinely a tier 1, meaning it just looks beautiful on all time frames and it doesn't care about what the market's doing, then I'm not rushing into anything. 342, you're a big old mess, you're going. FANG, it's kind of a bullish retest here, but it's doing nothing pre-market. We'll come back to you, 30-minute high. This thing's gapping down, bearish gap. Maybe, McGraw, maybe a Condor. Out of the money call spread, out of the money put spread. Let's come back to that. Tricks, it's an uptrend to all-time highs. Every attempted breakdown's ignored. Beautiful 20, railroad track over 50. We'll come back to that. INVH, looks like it's opening flat, but it's a very bullish daily and weekly. This is definitely worth watching. That's a beautiful 1, 2, 3. There's only one day so far in the week. Today's Tuesday. But if it were to close like this, muy bueno on the weekly. William, Twitter gap short, gap in the 35.90. There's a lot of overlapping bars here. So it's not a no-brainer, but 10-minute low, if it can't take out the pre-market high, William, in 10 minutes, then I'd say yes, you can short a 10-minute low, stop pre-market high just for a day trade, not a great swing pattern. These hotels, hotels, airlines, cruise ships, restaurants, they most of them negated this bullish gap up. Had earnings here down a little bit. Weekly could go to 40 bucks. So let's keep an eye on Hilton there. Parham, that I can't tell where it's gapping, so I don't know. I can't tell. T2 naked put 20 to 30 points out. Naked put, or you got a cliff. We have this, okay, directional long. So you want to buy a put. You want to, okay. Yeah, next time just tell me I want to buy a put, and I know that's directional bearish, because when you're telling me directional long, that's kind of a double negative, a directional long put, right? So this one's gapping up to 175. So you just want to fade it. You want to fade the strength. See, he meant sell. See, Cliff, how I'm confused? So yeah, we'll come back later and talk about language. Space. I mean, it's extended, so it's not a no-brainer. And then secondly, go through your checklist that we talk about 100 times. Tell me if the options are liquid, which they're not going to be. They're not going to be on earnings within the first 10 minutes on a wild animal like that. So just for me, I wouldn't even look at it for 10 minutes. But it's also, extended. So that's just not a compelling, it's not what we teach, right? We teach selling put spreads on support in bullish setups. Right there, July 1 would have been a no-brainer. In fact, this was in last weekend's letter. Right there, over this high, but the gap up messed it up. And I gave you a put spread. Now it's gapping up off my charts here to 175. You can pull a McGraw and do whatever you want. That's in your own trading plan, and I got no problem with it. But it's just not what we teach. Cameron Fitch, long, we just, like I said, Cameron, the 15-minute is bullish, so it might be a put spread. I'm not, take that back. Take that back. It might be a day trade over yesterday's high because of the bullish 15, but we do not buy things up 1, 2, 3, 4, 5, 8 bars in a row far from the 20. So you got conflicting time frames. So could it work? Sure. Would I do it? No, for that reason. Fitch, SSNT. Jake, what do you want me to do with that? I mean, what do you want me to do with that? It's nothing that we teach. It's, gapping up 300%. I got no pattern pre-market.